Hey, before you scroll past, what if I told you that right now, somewhere in the world, someone just turned $500 into $500,000, and the only difference between them and you is 12 words? Stick around. We're about to fix that. My name's Chris, and today I'm breaking down financial terms that will make you sound like the smartest person in any room. Dinner party, job interview, date night, doesn't matter. Let's go. Term 1 asset. Let's start simple. An asset is anything valuable you own. Your car, asset. Your laptop, asset. Your phone, also an asset, but a depreciating one, which I'll get to. Small assets are things like your watch, your jewelry, your sneakers. Large assets, your house, your investment portfolio, your business. Here's the golden rule Chris lives by. Rich people spend money buying assets. Everyone else spends money on things that pretend to be assets. Term 2 liability. Now flip it. A liability is anything you owe. Car loan liability, student loan liability. That credit card you swiped last Friday telling yourself I'll pay it off next month? Liability. A lot of people think liabilities are just debts, but really, they're the things quietly draining your future wealth right now while you sleep. Term 3 net worth. So what's your net worth? It's not your salary. It's not your job title. It's the number you get when you take everything you own and subtract everything you owe. Simple formula. Assets minus liabilities equals net worth. If you have $400,000 in assets but $250,000 in debt, your net worth is $150,000. That number can be negative, and for a shocking number of people, it is. The goal is to keep pushing it up. Term 4 income. Income is the money flowing into your life. There are 3 types. First, earned income, the paycheck you get for showing up and doing the work. Second, business income, what your company makes after expenses. Third, and this is the one Chris is obsessed with, passive income. That's money your investments generate while you're not working. Dividends, rent, royalties. The wealthy focus on building passive income. The rest of us are still trading hours for dollars. Term 5 expenses. Expenses are the money flowing out of your life. Rent, groceries, gas, streaming services you forgot you subscribed to in 2021. Here's what separates disciplined people from broke people, not how much they earn, but how much they keep. You can earn $200,000 a year and still be broke if your expenses eat $210,000. Track your expenses. Seriously, it's the least exciting thing I'll tell you today, and it's also the most important. Quick pause if this is already making your brain click. Smash that subscribe button right now. We break down complicated money stuff like this every single week, in plain language, no jargon, no gatekeeping. Okay, back to it because we haven't even gotten to the good stuff yet. Term 6 capital. Capital is the money or resources you use to build or grow something. Starting a business? You need capital. Expanding your investment portfolio? Capital. Think of it as fuel. Your car doesn't move without fuel. Your financial goals don't move without capital. The more capital you have working for you, the faster you grow. This is why wealthy people are obsessed with not spending their capital on things that don't generate returns. Term 7 stock and equity. When you buy a stock, you're buying a tiny piece of ownership in a company. If that company grows and becomes more valuable, your piece becomes worth more. That ownership percentage is called equity. If a company is worth $2 million and you own 10% of it, you have $200,000 in equity. Now here's where people get tripped up. Owning stock doesn't mean you're the boss. You'd need to own most of it to have any real control, and even then, you'd still have to answer to the board. Trust me, Chris knows. Term 8 liquidity. Liquidity is how fast you can turn an asset into cash. Cash itself? Maximum liquidity. You can use it right now. A publicly traded stock? High liquidity, sell it in seconds on your phone. Real estate? Low liquidity. Selling a house can take months. It matters because in a financial emergency, illiquid assets won't save you. This is why financial experts always say, keep an emergency fund in cash, not locked inside a house or a long-term investment. Term 9 Hedge a Hedge is a backup plan, a second investment designed to protect you if your first investment goes wrong. Let's say you're heavily invested in tech stocks. You're worried they might crash, so you also put money into gold, which historically goes up when stocks go down. That gold position is your hedge. You're not betting against yourself, you're protecting yourself. The wealthiest investors in the world hedge constantly. They're not just trying to win, they're making sure they can't completely lose. Term 10 Bull and Bear Market. A bull market is when the overall market is going up, prices rising, investors confident, money flowing. Everyone's excited, everyone's making moves, the economy feels invincible. A bear market is the opposite. Prices falling, investors panicking, uncertainty everywhere. Here's the thing most people get wrong: both markets are opportunities. Bulls make money when prices rise. Bears make money when prices fall. The only people who lose in both markets? The ones who panic and do nothing. Term 11 Volatility and Diversification. Volatility is how wildly a price swings over a short period. If a stock drops 30% one week and gains 40% the next, that's high volatility. High volatility means high risk but also high potential reward. The antidote? Diversification. Don't put all your money into one thing, no matter how confident you feel about it. Spread it across different sectors, different asset classes, different geographies. That way, if one market crashes, the others can cushion the blow. It's not exciting, it's just smart. Term 12 Leverage is borrowing money to amplify your investment. Borrow $50,000 from a broker, add your own $50,000, now you're playing with $100,000. If the investment grows 20%, you've made $20,000 on a $50,000 stake. That's a 40% return. Sounds great. But if it drops 20%, you've lost $20,000 on money that wasn't even yours. You're in debt and your investment is already down. Leverage is a multiplier. It makes gains bigger and losses bigger. Use it carefully, or don't use it at all until you actually know what you're doing. Term 13 Arbitrage. Arbitrage is buying something at a low price in one place and selling it at a higher price somewhere else. Someone buys sneakers for $80 at retail and flips them for $300 on resale platforms. That gap? Arbitrage. In finance, traders do this with currencies, commodities, and stocks across different exchanges. The window is usually tiny and closes fast the second other people spot the same opportunity. The gap disappears. But when it's there, it's practically risk-free profit. Term 14 Capital Gains and Capital Loss. Capital gains is the profit you make when you sell something for more than you paid. Buy a share for $50, sell it for $90, the $40 difference is your capital gain. The government will tax this, by the way. How much depends on how long you held it. Capital loss is the opposite: you sold for less than you paid. The silver lining? Capital losses can sometimes offset your capital gains on your tax return. Every cloud, right? Term 15 Speculation versus investment. Last one, and this one matters. Speculation is making a financial bet based on a feeling, a hunch, or hype. You heard someone at work talking about a hot stock. You saw a tweet. You just feel like it's going up. That's speculation, not evil, but risky. True investing is based on research, fundamentals, and long-term thinking. The difference? Investors build wealth over decades. Speculators sometimes get lucky and more often don't. That's 15 financial terms that will change how you see the world and how the world sees you. Here's your homework. Pick 3 terms from today's video and use them in a real conversation this week. Just 3. You'll be shocked how quickly the knowledge sticks when you actually use it. If this video helped you, drop a comment below. Tell me which term blew your mind the most. And if you haven't subscribed yet, what are we doing? Hit the button. Every week, Chris shows up with content like this. No fluff, no filler, just the stuff that actually matters. See you next week.